Unfiltered opinions.
Sometimes you have ideas and you're not quite sure why.
Secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
In our deep dive this week, we are diving into the world of Stokvels. We're going to be taking a look at this in light of the month of July that kicks off Savings Month in South Africa. And Sai and I had quite an interesting conversation around that, and we thought perhaps we'll do maybe one or more conversations around savings and wise decisions where we can find them. But more than that, Sai, you and I spoke, and you said Savings Month has been going on since 2010. 2001, and South Africans haven't been saving. And I came back with a response to say it's because South Africans don't have money to save.
Which is a fair point. I mean, there's the FNB retirement thingy-majiggy, which came out Thursday or whatever last week.
Survey.
And if you look at that data, middle-income earners in South Africa are reducing the amount that they're setting aside for retirement. Now, that's not because they all expect to win the lotto, although they would certainly hope to. It's because they don't have money. And we keep on talking around, are we, as individuals, mostly as a collective rather, better off than a year ago? Sure, yes. Inflation's down, rates are down, two-pot money, etc., etc. But let's be clear, it's relative. It's not like we're out in the streets partying.
That's
Although
it.
Somebody was the other day and woke me up. But I mean, we're not, it is still massively tough.
But you bring up the two-pot thing, and I think I see that as a perfect example of how South Africans don't have money. The amount of two-pot withdrawals that we're seeing, and it's people saying, yes, it is only 30,000 Rand. Yes, it is still going to be taxed, but it is more money than I have right now, and I can put that money to something. The two-pot withdrawals should not be this high. We should not be happy that people are accessing their retirement funds early, because it means then that the current situation is not tenable. People are unable to get through things as they stand, and therefore they're saying, I will have to dip into this two-pot thing because I need to plug some of the holes. And for me, that is a more alarming thing than saying, hey, two-pot, you now have access to your two-pot money, blah, blah, blah. It's worrying that so much of the two-pot money is being withdrawn.
Yeah, and evidence says it's going to debt. I mean, that doesn't like overwhelmingly reassure me. It just says people have got so much debt that they're prepared to sacrifice some retirement to get rid of the debt. And then the question is that what got you into debt in the first place, paying off the debt doesn't stop you from getting back into debt a second time around, and then coming back for more two-pot. And so
it's a vicious cycle that could potentially start.
Yeah.
So perhaps we look at and this is why we looked at the Stokvels conversation, was to say perhaps there is another way. And I remember penning an article about Stokvels quite some time ago. And one of the things that I highlighted in that article, and we spoke about it when we spoke about property investing with Moshima on this show a couple of episodes ago as well, I said it's probably the most powerful tool out there that we have as a population, because it allows you to achieve fractionalized investment into something without the risk of leverage that would come with derivatives trading and that sort of thing. But at the same time, it allows you to reduce your risk and still access a return of sorts. Now, understanding, of course, that because it's fractional investing, your return is also going to be fractionalized in its return. But it does mean then that you have so much. I wish people just understood how much power you have as a collective.
Yeah. And I think there's lots to it. I mean, pre-easy equities, if you rocked up with anything under 20,000 for a single transaction, you were going to be paying huge amounts. The easy equities now means you can literally do $100 back to your fractionalized part. But it's more than just the money. It's pooling knowledge. So, particularly when you're new into it, it's like this is a little bit scary because, to be clear, stokvel could be a grocery stokvel, a saving, a birthday, a property, an investment club. I mean, they're all fall broadly under that process. And when you're starting out, the whole thing's just a little bit scary. Well, it's a little less scary if there are 4 or 5 of you sitting around the table.
Let's put it into context, right? The one thing I love about what our community has become over the last year, right? And we're going to celebrate our 1 year anniversary in the month of July as well, is the size of the community and how people just engage with one another. And I'll use our community as an example because it is exactly that, a growing community that can be a great example for Stokvels. If we said to our community today, and we've thrown this out as a joke and all of those sorts of things, but if we said to our community today, right now, hey guys, we're starting a community Stokvel at Insider. We're going to have every community member put in 1,000 Rand, right? Let's just take not all of our community across all of our platforms. Let's just take our TikTok community at the moment that has 25,000 plus people from that perspective. If every person there put down just 1,000 Rand, right? Or and it's not even 1,000 Rand on a monthly basis. It is a once-off 1,000 Rand, right? So let's say we do it once in January, and then we take that money and it goes into investing into properties or other things. That's 25 million Rand of buying power you have from a one-off deposit. Yeah. Now, if you start to do this,
you could buy De Beers.
we could get to De Beers, right? Now, if you start to do this on a monthly basis, let's say, for example, fine, take half of that. Let's say the 350 Rand social grant or whatever, one of the months you sacrifice, and let's say everybody puts in 500 Rand, right? 500 Rand per month over, call it 6 months, right? 500 Rand over a month over 6 months is 1,000 Rand over 3 months, is 75 million Rand across 25,000 people. Do you know what you can do with 75 million Rand as a pooled Stokvel? And I've always looked at that and said, but guys, this is probably the best tool that we can use because all it requires is, and for some reason this is the most difficult part of a Stokvel, is an aligned vision.
So, so let's assume everyone's got the 1,000, but the next challenge is that aligned vision.
The administration of it and all of those things.
But you got 25 million. I mean, you really now do have the ability to properly manage this and to have the administration and to have a CEO and a CFO and to be as a PTY and issuing shares rather than the old-fashioned Stokvel, which was, money in a pocket type of thing, and etc. So you really do have that ability to properly do it, to pay officers, etc., execs, whatever you want to call them.
And you also don't have to be excessive about your expenditure, right? So you don't have to have a flashy office, a flashy CEO, salaries and all of that sort of thing. No, if everybody has an aligned vision that says that all we want to do from this 25 million Rand, so take the 25 million as a good example, right? We take the 25 million, we go and we don't even have to put it into the stock market. We go in and we buy a commercial property. You buy one commercial property at 10 million, you buy another one at 10 million, you've got 5 million of operating expenses or whatever to run both and all of that. That property has tenants. It'll earn you an income. It is an asset that you can leverage into the banking system to get more capital, to buy more assets, which is effectively what people then do when looking to build on.
Yeah, I mean, if you come in at an LTV, loan to value of, say, 25%, your 100 million your 25 million you're talking about can also get scaled. But your earlier point was we don't need debt in this situation. I mean,
you don't
see the attraction of it.
Suddenly you can have an investment, exactly as you're saying, we don't need debt. And I think that's a critical thing to try and understand. Yes, there is value in debt. Yes, there is value in using the capital and paying a nominal interest rate on that borrowed capital, provided you're earning more than that. Separate conversation for a separate day. But you can effectively run a full-on Stokvel setup where you don't need any debt.
Yeah. And it's many things. It's the pooling of resources, and that does bring power with it. I know that easy equities will give you fractionals, but that really does create power, is that ability to pool resources. Pooling of knowledge, hugely powerful as well. Pooling of the admin part. No one likes the admin part, but now you can, now
you do it once instead of 25,000 times.
Exactly. So it is hugely powerful. And South Africa, it's got, what's it? What was the last number? 60 billion or something crazy sitting in Stokvels. Most of it sitting in cash outside of the formal economy, which drives the FSPs the world over completely crazy. Not the world over, South Africa over. But that's their problem, not ours. And we're kind of, I suppose what we're thinking here is kind of taking Stokvels away from our grandparents who've been using them for forever and a day, and saying we can do them like differently.
We can.
Because back in the day, I mean, my sister had a Stokvel 30 years ago, but it was just cash, right? So everyone would throw in money, and once a month, one of you got all the money, so that you basically got a bonus, an extra bonus.
And this is something you can still do, right? So I think, again, coming down to the alignment and the aligned vision that you then have from a Stokvel point of view is if we then agree, okay, we have this amount of buying power, this is what we're going to do with it, right? We can go out and buy 25 1 million rand apartments, put all 25 of them on Airbnb, get all of that money because you've bought them cash. So all of the revenue you're generating from them is to either maintain the property or to get you a return. And you then go from 25 to owning 50, to owning 100, to owning 200, to building an entire property portfolio. And then at the end of it, if your Stokvel runs over 10 years and never receives another day of investment other than the initial investment, after 10 years, you probably would have enough property to then give everyone back as an investor an apartment that's fully paid off.
Wow. Yeah.
It's not like
you get Baldwin to build an entire city for you.
That's it, right? So and that's capital at work, because at the end of the day, when it comes down to whether you're looking at investment decisions, whether you're looking at property, it doesn't really matter what asset class you're looking at. The one thing that comes into, there's two things that come into play from an investment point of view. It's information about whatever it is you're investing in. That is one form of currency. And the other is capital. And when you've got the capital, and like you said, with the pooling of resource and the pooling of expertise, you're pooling information as well, right? So now you can make an informed decision and you have the capital to move on that decision. Why are we not doing this more?
Yeah. And you also have, I mean, it's like the buy-to-let. I always said that, I mean, I hate buy-to-let in the property space, and there's some real challenges with it, and some of those challenges are just that you need some critical mass. And that critical mass, depending who you speak to, is somewhere between 30 and 50 units. Well, boom. Yeah, you've got, 25 million, you've got your units.
And okay, let's say there's several million people employed in the country, several million unemployed people, right? So let's say for the first 2 months, we put aside 1,000 rand each for 25,000 people that are able to do that. It's 50 million. We don't do anything with it. And at the 50 million mark, then we go out and purchase the properties. We can now suddenly buy properties in Cape Town that have historically now become ridiculously unaffordable. You know what I mean?
Yeah.
And the ROI that you're starting to see, and this is just, again, property is one example. But one example of
we just
what
happen to
you
be
can,
focusing on it.
That's it. It's not to say it's the only thing you can do with a Stokvel.
You could buy little businesses. You could buy franchises. What about
you're buying revenue, right? You're buying cash flow.
What about taking your 25 million and buying, I don't know what they cost, 10 franchises, 10, I don't know, whatever franchise.
25 million gets you 1.5 McDonald's.
Yeah. Okay.
So McDonald's franchises are probably about 15 million or so.
But you can get, we both jump to QSR, but what about dry cleaning? What about, there's others out there.
That's it.
And to your point, what are we buying? Revenue.
Yes, you're buying revenue, you're buying cash flow, and you're buying credibility with a bank, with an you can build an entire investment vehicle that then goes out and either buys distressed assets, buys discounted assets. You start to flip those assets into more revenue, and then you sell them off to someone else. Prime example of a good sale, right? And this wasn't a sale from a distressed asset. This was a business that was built, held onto and then at the right time, someone came in, offered you money, and then you went, right? Last week, Bank Zero, Michael Jordan's baby that he'd been curating and growing for so many years, went and was bought out by Lesaka Technologies at R1 billion. Now, I'm not saying that every single one of the businesses you buy is going to turn into R1 billion opportunity. We've seen what happens with the likes of Naspers trying to flip a Mr. Delivery and a Takealot. It might take longer, right? But when you suddenly have the buying power to go and take that kind of risk and say, we're going to identify 10 or 15 businesses, and out of all of those 10 or 15 businesses, we only need one of them to hit the right volumes or the right levels. Now you've got the expertise to say, which 10 do we identify? How do we do this? How do we build it? How do we grow it? And the buying power is there. I think for the longest time, when you sit there and you don't have buying power, it limits what you start to look at in terms of opportunity. But if the buying power is not a limitation, if money is no object effectively, do you understand what you can do from a business perspective?
Exactly.
Just have an aligned vision. Just have the common vision.
And that's the hard part, but it's not an impossible
It's not impossible. It really isn't.
Yeah.
And Stokvels have such a powerful way of getting people to do that. I think in this day and age, people need to demystify exactly what you're saying about how Stokvels used to be viewed. We used to have this whole, but this lady ran away with the Stokvel money, or this gentleman ran away with the money of the Stokvel, or whatever. And that has happened. The reality is that has happened. But in the day and age that we live in now, a day where, or an age where digital transactions happen and currency is information and capital, and you have a setup or a tool that fundamentally people understand. Because if I have to explain to someone what a derivative instrument is versus explaining to someone what a Stokvel is, I know which of the two conversations is an easier conversation to have, right?
Yeah.
And it's not because one is a lesser product than another. No. By no means is it that. It is just simply because we know what Stokvels are.
Yeah.
So let's use them.
Yeah. So let's use them. I think that's the key point. Let's use them.
Let's use them. Folks, we'd love to get your thoughts on that. Give us your thoughts around the Stokvel communities. Would you start a Stokvel? Would you be part of a Stokvel that was started? And what would your conditions be? Because there has to be an element of trust. There has to be an element of we can believe that this is for the right intentions. So if somebody were to say, let's start a Stokvel, what sorts of measures would you want to put in place? Obviously, I mean, what jumps to mind for us is things around regulation and structure and all of those sorts of things. But that's because we come from a formalized financial services environment, right? But we'd love to hear your thoughts on that. We'd love to hear your take on the Stokvel world and what we make of it. We're going to leave the deep dive on that note. We're going to get into investor insights. We're going to be taking a look at a particular stock pick that we're adding to the wall, but we're also going to be taking a look at something very interesting from Eskom. They've decided they want to go into crypto mining. We wrap things up with investor insights. We're taking a look at a very brave decision by the team at Eskom to go into the world of crypto mining, and we're also going to add something interesting to our wall. Now, I saw this. The CEO of Eskom, Dan Marokane, said that crypto mining could be an alternative for Eskom from a power perspective. We've seen a huge shift in people going off grid in terms of their housing and their electricity requirements. And it was a very interesting statement to come out that Eskom would potentially start to look at that side of the world as a new stream of income for them, because effectively crypto mining, and we know whatever type of mining you do from a digital asset point of view, requires a lot of power. We've seen a lot of people go the solar farm route, of course, to say, I'll power my crypto mine with a solar farm and all of those sorts of things. But do you think this is viable?
Well, I mean, is this during stage 4 load shedding or stage 2 load shedding? Because if I'm being load shed so that old Dan and his buddies can make some bitcoins, I'm like maybe not so thrilled. Let's pretend for a moment that we don't have load shedding and that things are working fine, and that we're not running the open turbine gas generators and that things are fine. A lot of pretending going on, but nonetheless,
still pretending.
Answer, why not? I mean, and the problem is that boat has sailed, but we used to have huge extra excess capacity on our grid. There must be points of time during the day when, Eskom must be able to say, look, we've got 2 gigawatts of excess. Let's take 1 gigawatt and mine. And then as they lose gigawatts for whatever reason, demand or something like that, they can pull back on the mining. In other words, they could manage a smart grid.
So that's the interesting thing. They're not saying they will do it themselves. And you've just given them a brilliant idea here.
Then who's going to do it?
They're saying that for the crypto miners out there, they will provide the power,
we did this
resource.
before. Come on, Hillside Aluminium Smelter up in Richards Bay. We gave them cheap power because we had lots, and we're still giving them cheap power, and we don't have lots anymore. I want to see that contract first. Oh, they want to entice crypto miners.
That's it. So they want to entice people because, exactly as you've said, demand has reduced. And I spoke to independent energy analyst Tsepo Gadima around that, and he said the demand, because of the fact that people have gone off-grid onto solar, demand on the Eskom grid has reduced dramatically, and it will only continue to decrease even more. So much so that, of course, Eskom has felt that they need to put satellites in the air so that they can see who's not correctly registered for solar by checking whether or not you've got a solar panel on your rooftop. But let's not digress. Let's stick to the point. They're trying to encourage demand after 16 years of having people suffer through load shedding, to the point where people have decided, I would rather go into debt to get off of Eskom's grid. Now suddenly they want people to be like, oh no, we'll stay on the grid. We want to be on the grid.
Is our power cheap enough? That's the trick.
Our power was the cheapest in the world at some point.
Now it's about the middle of the thing.
No, but that's not because that's not because power generation has suddenly become that much more expensive.
No, it's because Eskom's just charging us more.
Exactly.
But for a crypto miner, the numbers need to add up for me.
That's it. And that's the other part of it, is the numbers are so critical from a crypto mining perspective, because I'm not mining 1 Bitcoin a day. It takes me a lot to mine a little bit in terms of the overall output, right? So much so that it's not good for retail miners. It might be good for industrial grade miners. If I'm a MicroStrategy perhaps that wants to put money into mining instead of buying the Bitcoin, but then why would I do that? Why would I go put the money into the mining of the Bitcoin when I can just buy the coins and hold the coins as I already do, right? That's another conversation, I suppose, for another time. But from a power point of view, you're saying to the market, hey guys, we are trying to attract new demand because we're seeing we're losing existing demand. Fine, very noble. But then at the same time, you're saying to the same consumers in the South African market, we're going to apply for a 30% increase to the tariffs every single year because we need to cover our costs and those sorts of things. You're not running the organization efficiently.
Yeah, so I just did a quick look. There's T's and C's here, but let's call it 15 cents per kilowatt hour kind of gets you to your economics of scale, and we are effectively paying
R5 something
2.36 in Joburg per kilowatt hour.
Right. And I think there's other areas where we're paying R5 per kilowatt hour. And I remember when I spoke to Tsepo Gadima, he said we should be paying no more than R1.22 in tariff. Right? So we're paying excessively more than what we should be paying right now as it is. And then you want to then say to the consumer, hey, let's make it more attractive for you to come and mine crypto here instead of just supplying electricity to the places that you want to supply electricity to.
Yeah.
And you're not collecting revenues because...
And it's also, are you trusting enough to set up your crypto mining farm in South Africa where and Eskom is effectively your
only supplier.
Your partner.
Or if I go, let's say I set up a crypto farm in South Africa. Great, lovely. I have the option right now, and this is what private capital does have, is the optionality to then build it as a solar farm and do it that way. Why? Where is the incentive for me to, because you can't suddenly say, oh, but what if the sun runs out? That's a very, very silly argument that we're not putting forward here, right? But has Eskom still got the trust? And that's the important question you raise, Size. Has Eskom got the trust left in the market to be able to then convince
the answer is not within 100 miles. Surely.
Maybe there's no transmission line in that 100 miles.
Entirely possible. I think Eskom should balance their load and do some. And every so often they could turn on the Stykfontein hydroelectric, make 4 coins. Point is, 4 coins, $500,000. Nice. Doesn't help Eskom's problem. Doesn't.
There's several. And perhaps that's another conversation for another day, is what does help Eskom's problem. That's not for us. I mean, there's an entire team at Eskom that has that figured out, and apparently this is part of that plan. But we're just weighing in on Eskom's bid to potentially go into the provision of resource for the crypto mining space. Give us your thoughts on that. Is it viable? Does it make sense? Should they be looking at other things? We're going to move on to our stock pick. And this week's stock pick, we haven't had too many of them come up onto our wall. We're adding a company called Foresight to the wall. Why is that?
So it's a weird little business. I chatted with the CEO, Tisha Zitsko, on my show this morning around results. The results weren't bad. There was so many moving parts. Comparisons were hard. But in essence, what they do is they come to your business, and they are across all industries, and they've got a partnership program which puts them a really, really strong presence into the rest of the continent, most notably East Africa, Kenya, but basically everywhere as demand comes on. And what they're doing is they're saying, okay, so you've got Microsoft Outlook, and they will sell it to you, but there's not much money in that. Can we put something on top? And that something on top could be you had a meeting and it automatically a day later sends a follow-up email or something like that, a sales call. So it's sort of trying to make your stuff smarter and simpler. And I know those are two contradictories, but you can make it a lot of automated. He talks a lot around AI and agentic agents. I think a lot of it might be machine learning, which is sort of the more entry level, but that's fine. It kind of works there too. And I mean, their margins are currently 4-5%. I think that there's space here where they can get those margins up. They can get a lot more traffic through there. And in essence, if they make a piece of software which is really good and game changers, they can then sell it into their channel. So much like CrowdStrike. CrowdStrike starts off, they've got 10 little pieces of security software that they sell to people. And then every time they add another piece, they've got their expanding a bunch of people, of customers, and they can say, hey, now we've got the strawberry flavored one, and we've got the yellow one, and the pink one, and et cetera, et cetera. And they can then expand that in. So you're growing your client base, you're growing the offering to the client base, and your clients become a little bit addicted to you, because when they wake up one day and they say, we don't like Foresight anymore, we want to get Two-Sight, Foresight's like, well, sure, delete it all and
that's
knock
it.
yourself out.
So you also build that dependency from a client perspective. Okay.
So, I mean, are they there? No. Will they get there?
Maybe.
We'll find out, but it's one I'm keeping a look on. It's a very simple business model. We've had box droppers before in South Africa, Mustech still, where they go and sell computers. I mean, those are nice, but what's your edge? Here they come and say, you know what, our edge is that you've got Windows, let us make it work smarter. You've got a CRM software, you've got a monitoring software, whatever it might be, depending on your industry. You're a farmer, you've got a drone, but what are you doing with that data that's being collected, etc.? We produce as individuals and as corporates like more data than ever before. Can it be cleverly used? Yes. Can it be uncleverly used? Also yes. But I really like, and there's a lot of buzzwords and they always kind of slightly bother me, but it's something which this is something that if it works, this could do really, really well because of that dependency that you create, because of that sales channel where as you launch new products and drop those in. Stock's not expensive. Yeah.
So I see the appeal and the play on data, because that's what you're leveraging here is we're going into data differently, right? And because we're omni-channel, omni-industry, we can build you solutions for any and everything that you need your business to do. I suppose the bigger question then becomes, how long does it take for a Foresight to build a tailored solution, right? So I can build a general solution that is generic to a CRM, or I can build a tailored solution tailored to that particular business. Now, there's risks on both sides. There's risks that if it's too tailored, there won't be enough of a customer base. If it's too general, it's easily replicable and can be easily replaced kind of thing. So I think for me, the question then becomes is, how quick are you at deployment? How innovative is your solution and how unique is your solution in the markets that you operate in? And then I suppose the rest of it doesn't really matter beyond that, because if you're building solutions that people need, and that's why I went the tailored route, because some things that I need, another business might not.
So I hadn't thought of that. The tailoring is a competitive advantage, but also a massive risk.
That's it.
And I honestly don't know how much they do or don't tailor, but it is potentially a huge risk. If you've got to go and tailor every little thing, signing up 10,000 new accounts is not lacquer.
It's not.
No, not lacquer.
It's not.
But then, I mean, CrowdStrike doesn't tailor. I mean, they've got it's basically cookie cutter. And I'm not sure how much, so CrowdStrike is doing it really simple. They're at the kernel level and they are doing security. So
Yes.
whereas Foresight's
which is
doing,
their niche.
correct. Foresight's doing a whole lot more, which does potentially add some
But it also
complexities.
brings diversity, right? So you can then
Sure.
say we can compete with CrowdStrike on the security, but we can also compete with a CrowdSense that does other things and so it kind of builds you into a diversified business. And I for one happen to really like diversification, but at the same time, it's what's too diversified, what's spreading yourself too thin. That being said, how much do we like the stock? Where does it sit on the wall?
I want to watch it.
Okay.
Yeah, this isn't something I'm rushing out to buy. Let's go and watch it. Let's see how it plays out. This is no major rush, is it? Because there are risks. They've had some missteps in the past, and I appreciate those are in the past. Let's see how they go.
Let's see how they go. Okay, so we're going to add it to the wall. It doesn't make blue chip just yet. We're going to see where we throw it onto the wall, perhaps under really like it, perhaps under some easy money. We'll see where we feel about it, and then we will update the wall from that perspective. We'd love to get your thoughts on that as well, around just where you see information heading, data, and the value of data, and I suppose what kind of companies out there make sense. If there's a company you'd like us to take a look at, please, of course, let us know. We'd gladly do that and see if we can shed some light on it. And of course, this was not financial advice. We don't do that on the show. Anyone that tells you that we do is lying to you. Don't believe everything you read except our disclaimer. That is a very valid disclaimer to believe. And we're going to leave the conversation on that note. Before we go, as always, we have an unfiltered opinion of the week for you. And this week's unfiltered opinion is largely weather driven, but also probably a lot of sense to it, right? Si, what's the unfiltered opinion of the
We
week?
should be Durban during winters. Wintertime, we go to Durban. We get there 1st of June. We can come home September sometime.
Okay.
All of us, Joburg.
Everybody, go to Durban.
Cape Town's welcome. Everyone. Durban's biggish. We'll
Don't
fit.
go there in the end of the year.
We'll make a plan. We'll
Go there
fit.
for winter.
Go there for winter.
Okay, alongside that, another alternative if Durban gets too packed is Limpopo. Weather there is remarkably great, remarkably
Yeah,
pleasant.
Limpopo, I love it.
No beach. We can build a beach. If we can build a beach in Pretoria, we can build a
25
beach.
million
There we go.
Stokvel
There we go.
beach in Pretoria in Limpopo.
There you go. That's what we're using our Stokvel money for. That's Insider Exchange. We're going to leave it on that note. Remember, investing isn't hard. Just try it.